Good afternoon, everybody, and welcome to TradeStation. This is Michael Burke. I'm Vice President of Client Trading here at TradeStation, and I want to welcome you to another edition of our TradeStation Trading App Showcase. Today we have Leibfarth. He is an easy language programmer and developer and has some products in the store, and he's going to be talking about his automated strategy package, and we'll get to Lee in just one moment. Keep in mind that the following presentation is for educational purposes only. All of the symbols and trading ideas discussed by the instructor are for demonstration purposes and are not recommendations. Active trading is not suitable for everybody. You can find additional disclosure information on the TradeStation website. All right, so we're going to turn it over to Lee. Lee, it's all yours.
Thank you, Michael. I hope everyone can hear me okay. I also want to thank everyone for participating in today's presentation. My name is Leibfarth from PowerZone Trading. I appreciate your time, and I'm excited to talk about day trading automation with VSTOPS ProTrader. The VSTOPS ProTrader is a product that we developed to help aspiring system traders develop their own intraday strategies. And today's presentation will focus on automating short-term trading ideas. And for over a decade, I've been a registered easy language specialist, and my company provides custom programming and consulting for TradeStation users. And we specialize in coding intraday indicators and strategies that can be used in day trading. And with the VSTOPS ProTrader Strategy Template, we've taken our experience in developing intraday strategies and put this into a tool that allows you to jump right into system trading without spending thousands of dollars to create a custom day trading strategy or spending hundreds of hours in programming. I do need to point out our disclaimer and that this presentation is for educational purposes only. And as we go through the presentation, if you have questions, feel free to type those into the chat box. I will get to those at the end of the presentation. So if you have a question, don't feel as though I'm ignoring you. I really just have a lot of slides to go through, so I'll try to cover everyone's questions. And also, we're definitely going to be talking about the VSTOPS ProTrader product, but even if, if this doesn't appeal to you, hopefully there's some information in here that will help you in your trading. So first of all, the first thing that we'll cover is what is automated day trading. And automated day trading requires a strategy. And a strategy is essentially a set of rules that define all trade entries, exits, and position sizing. For discretionary traders, this is known as a trading plan. For automated or system traders, we call this a strategy. And now let's discuss what an automated day trading really is, or better yet, what automating a strategy is not. And many traders think of black box trading or high frequency trading when they hear automation, and that there's a robot making trades through their trading account without understanding why. And today's strategy automation does not have to be a black box system. In fact, traders can develop and customize strategies for automation and still maintain full control and understanding of why a strategy is making trades. And TradeStation is an exceptional platform for this type of use. So instead of an evil robot account terminator, you can use a strategy template like the VSTOPS ProTrader strategy template to jumpstart your automated trading without losing control. I would like to explain some advantages of automated trading and using a strategy. And here you can see a chart of the E-mini S&P with a VSTOPS ProTrader strategy at work. And to be honest, trades like this example do not happen every day. This is not something that you can always expect. We call this a kind of a rock star trade. This is kind of what we're looking for. But again, I have to point out that these trades don't happen all the time. But it is a good backdrop for the conversation that we're going to have about, some of the advantages that you can get from automating your trading. And the first is the ability to backtest. And backtesting is one of the most powerful benefits of using a strategy. This process refers to applying a strategy to historical data to verify how a system would have performed during a specific time period. And this ability to test on historical data is an incredibly powerful way to validate a trading concept or idea. As long as the idea can be quantified, it can be backtested. Optimizing, this is a process of finding the ideal value for a specified strategy setting. And this involved entering a range for the specified strategy setting and letting the computer do the work, letting it do the math to figure out which value would have performed best. You can also use what's called a multi-variable optimization, and this means that it could do this optimization or do the math for two or more variables combined to determine what levels together would have achieved the best outcome. And this process, when done correctly, can answer important questions about what the best settings, markets, or intervals are for a particular strategy. Achieving consistency. I think one of the biggest challenges in trading is sticking to a plan. And even if a trading plan has the potential to be profitable, traders who ignore the rules are altering the expectancy of the system. And a strategy really allows traders to achieve consistency by trading exact rules. In addition, pilot error can be minimized. Minimizing emotions. Strategies can minimize emotions throughout the trading process, and by keeping emotions in check, you have an easier time sticking to the plan. Since strategies execute trade orders automatically once the rules have been met, you won't be able to hesitate or question the trade. In addition, this can also be helpful to traders who are afraid to pull the trigger. And likewise, strategies can kind of curb those who are apt to overtrade. And then finally, improved order entry speed. Since computers respond immediately to changes in market conditions, strategies are able to generate orders as soon as trade criteria are met. And getting in and out of a trade just a few seconds earlier can make a big difference in the trade's outcome. So as soon as a position is entered, all other orders can be automatically generated. Now, here are some realities of automated day trading. And we just talked about the advantages, but this is kind of the other side of the coin, or maybe some of the realities behind it. And in some cases, this may challenge some concepts of system trading on longer time frames. The first is that day trading strategies should be customizable. This allows the strategies to be tuned, or adapted to specific trading styles or risk tolerances. And also, the markets can adapt to, to signals. And having the ability to customize your strategy can keep your strategy in tune with the markets. And just as I think this is an interesting statistic, but over the last 10 years, automated institutional trading accounts for about 50 to 75% of all trading volume. Day trading strategies can be specific to a market or time cycle. And this challenges the concept that a strategy must be robust in order to be profitable. In other words, robust is a term, it's a trading term that defines a strategy as performing equally well on multiple markets and time frames. And in some cases, on short-term strategies, they can be specific to a particular market and time frame. I know I just said backtesting is one of the most, I think one of the biggest advantages of trading a system. Well, backtesting doesn't always equate to real system performance. And let me explain that a little bit. If not done correctly, in some cases, what we can see is that, past performance does not necessarily predict future results, but in some cases we might actually have to detune a strategy in order to achieve better results in actual trading. And really, it's not the backtesting or the historical performance of the strategy that matters, it's how well it performs in real trading. So we're going to keep that in mind as we go through this process. And finally, automated day trading strategies should not be left unwatched. While the strategies on a computer run very reliably, you always want to pay attention to what's going on. Things can happen, and we want to be able to handle those. And while most of us don't trade with anywhere near the volume of a high-frequency trading or a prop firm, just an example that comes to mind of what can go wrong, kind of an extreme example, when you've got a problem with your code. And a few years ago, a company called Knight Capital was one of the kings of high-frequency trading and the largest trader of U.S. stocks, accounting for about 17% of trading volume on the NYSE listed stocks and about 16% in NASDAQ listings. On August 1st in 2012, a new piece of trading software that Knight had just installed went rogue and started buying shares in 140 NYSE listed stocks. And during 45 minutes that morning, Knight accidentally bought and sold $7 billion worth of shares, about $2.6 million a second. And each time it bought, Knight's algorithm would raise the price it was offering to the market. And of course, other firms were happy to sell at those prices, and by the end of August 2nd, Knight had spent about $440 million unwinding its trades, or about 40% of the company's pre-glitch value. So again, while that's a very extreme example, we want to make sure that we are monitoring what we're doing in our trading, always. So how do we automate a trading idea? Well, this is basically a 5-step process. And the first step is to come up with a plan. And this is just to define the conditions or rules that define how a strategy will trade. Next up is testing. This is using the historical data, the back testing, if you will, to verify that the plan has potential. And if not, we go back and readjust the plan. Optimization. This is the process of adjusting the strategy in an attempt to make it more efficient. And then walk forward. And walk forward is also known as paper trading, and this is basically exposing the strategy to new data, data that it may not have seen before. And TradeStation has a very powerful application called a walk forward optimizer, which we won't really discuss it in this presentation, but this is one way that you can take your strategy after you've tested it and optimized it and see how it works on data that's unseen, because again, that's the real test. And if it fails any of those tests, we basically, it's a cycle. We go back to the plan, we adjust our plan, we go back into testing, optimization, and walking forward. And then the final step, once we've gone through all that, is probably the easiest, and this is simply involves automating the strategy. And in terms of rules, there'll be no deviation from the strategy that was planned or tested, and it's literally just a checkbox to get this to trade. So that's really, when we talk about automating a trading idea, this is the plan that we're going to outline. I'll be talking a little bit more about each of these steps in a lot more detail. So the planning, this first step, when we're talking about strategy trading or automating a trading idea, it involves developing trading rules and converting these into something that the computer can understand, aka converting your trading plan into computer code. And I think another misconception about automating your trading, you don't have to be a programmer to create potentially profitable strategies. And that's definitely the case with VSTOPS ProTrader. We've designed it so that you don't have to jump into the code. You can actually, the strategy has a lot of flexibility just within its inputs. So while it is an important step to take your trading idea and convert that into something that the computer can understand, ProTrader tries to jumpstart that process a little bit. At this point, I'd like to formally introduce the VSTOPS ProTrader. The VSTOPS ProTrader Strategy Template, what it is, it's a collection of powerful trading tools that are designed to help you build potentially profitable day or swing trading systems and harness the power of automated trading. VSTOPS ProTrader, it's not a black box system, but it's a template for creating your own short-term trading strategies. You can customize the system from a basic stop and reverse strategy to one that employs complex multi-exit money management tactics. You can even reverse the entry logic to fit different market conditions. And at the core of the VSTOPS ProTrader strategy template is the VSTOPS 2.0 indicator and paint bar. And while the strategy will function without these indicators, the volatility calculations from these tools form the logic behind VSTOPS ProTrader entries. And these indicators can be used to predict exactly where the strategy will enter in reverse trades. I'm not saying it's going to predict exactly when the market is going to turn, but you can tell by looking at the indicator when the strategy will take an order. Okay? And for this reason, we've included this as part of the VSTOPS ProTrader strategy package. And the VSTOPS ProTrader strategy template, this is an actual strategy that allows you to define exactly what type of trades to take, whether it's scalp, day, or swing, what time of day you want to trade, as well as dollar amounts for risk and profit goals. You can make use of backtesting and optimization techniques to quickly determine if your ideas would have been profitable in the past and to maximize the potential of the strategy in the future. And VSTOPS, I keep mentioning this, but VSTOPS is really the foundation of the strategy, and this began as an indicator that we developed and released a little over 10 years ago. And basically, we developed an adaptive filter to smooth out the market noise and provide a clear visual representation of market direction. And this is very similar to filters applied to audio or sound waves. And on this slide, you can see an image of white noise. And this is similar to the noise that you can see in typical intraday markets. Next, we apply the VSTOPS filter. And what this does is develop a clear signal for market direction and possible transition points. And, I think that this is I think sound is a great example because VSTOPS it uses the same type of filtering that you use in sound. We use basically a low-pass type of filtering, which is a very fast adaptive filter. And what we attempt to do is take that, the noise out of the market so that we can apply it and look for strong trends. And let's take a look at this at a chart, and I'll point out how this works. And so right now we just have a basic candlestick chart of the Russell 2000 E-mini. And when we apply VSTOPs to that, you can see automatically, it takes form, and we see two things. We see the color change, and that color represents the trend strength. And whether it's green representing bullish markets or red representing bearish markets, that just gives us a quick visual representation of the phase the market's in. The other thing you're going to notice are some dots that appear either above or below price. And what these dots are intended to do, and I'll try to point them out here, when we look at the market, we can see these dots, and these represent the possibility of stop locations, okay? So as I mentioned previously, that with this indicator, we don't want to have any surprises. We want to know, when we can anticipate going from a long or a short. And that's what these dots do, all right? And so as these dots move up with price, they track price very quickly. In other words, they're adapting to the volatility in the markets and moving up as price moves up. Now, if the price moves down, as it does right here, we can see this blue transition bar. And that represents a transition from possibly a long to a short type of market environment. And then we turn red, and then you'll notice the dots now appear above the price and again represent the same thing. So if price were to slide up and go above those dots, then we would have another transition in the other direction. And that's what the VSTOPs indicator does. Again, it tries to take some of the noise out of the market and give us a phase of trend that we can work with and trade with. And if we add the strategy component to this, now you can see that the strategy will essentially follow the rules of the indicator, where it will be taking long positions as we approach these blue transitions going into green bars, and then reverse into the downside. And there's a lot of different ways that we can use the strategy, and obviously this is a pretty nice market condition. VSTOPs tends to work best in trending conditions, and it is a great trending indicator. There's certainly some other ways that we can apply it to the markets, but this is just one illustration of what this can do in taking a kind of a blank price chart, giving it some direction and some idea. Trade planning. Now we're going to take a look at some of the ways that we can plan a trade. And what we're doing in trade planning is that we're answering some key questions like what, why, how, and when. And along with that, in the VSTOPs, we have the VSTOPs settings. That's one of the first things that we have to plan out. And the VSTOPs uses some settings, some length, and some standard deviation that allow us to adapt this to a variety of markets. And so the VSTOP settings are the first things that we can set up in our trade planning. The next is money management. This defines the trade exit strategy and how the positions are handled during the trade. And these include position size, profit targets, stop loss, break-even stops, brackets, and we'll discuss that money management in a little bit more detail in a few minutes. Performance switches. These are true-false switches that define how the strategy will perform during specific conditions. And these include allowing overnight trades, taking trades at the open, or reversing the logic of the strategy. Time filters. This is another important part of any type of intraday strategy. This just defines the intraday time when trading can take place. In other words, it tells us when we can start trading, when we can stop trading, and when we would close our trades at the end of the day. And then finally, we have the chart symbol and the interval, and deciding what to trade and what chart or interval best meets your needs. So trade planning. Now we're going to take a look at some trade examples to illustrate some of the possibilities and terminology used in trade planning. And again, we'll be using the VSTOPS ProTrader as an example. And here you see an example of how VSTOPS indicator can illustrate changing market conditions. And the first method, which I would say that you could use is what's called a stop and reverse, a basic SSR, or stop and reverse methodology. And here what we're doing is that we're basically changing the condition of the trade with every blue dot or every blue bar where we reach that transition point. So this is known as a stop and reverse, and this is maybe one of the more basic ways that we can use the VSTOPS ProTrader. And keeping in mind that this type of tactic may work well in a trending market, But in choppy markets, stop and reverses tend to not work nearly as well. And so that's why we might want to think about employing some other options or some other ideas. And one of those is what we call a profit target. And very basically, we have our entry point, which is that blue transition, and the profit target is a fixed target that's set up as a dollar amount per contract that we define before we even enter the trade. So in this case, let's say it's $200 that we're going to go ahead and place our profit target at, and then if the market does reach that position, we have a limit order that will take us out when we reach that profit target. Now, if we're trading multiple positions, so if we're trading one contract, we could use a single profit target. If we're trading multiple contracts, we can break that up over multiple profit targets. And this just allows us to scale out of a position by taking some profits. So in this case, we've defined 2 profit targets, and as the trade has kind of moved in our direction, we've taken those profits. And if we're trading more than that, if we have several contracts on, we can even use what I call a runner, or it's actually using the VSTOPS exit. So we have the 2 profits to scale out of the position, and the remaining third would stay in and follow the dots. In other words, it would kind of trail the stop, trail the market until it bounced back, which in this case, it actually bounced back below either of the profit targets. Ideally, we would hope that we would try to catch a trend with this, and that's what VSTOPS is very good at. And we could use that trail, that kind of intelligent trailing stop to continue riding the market if it stayed in a trend. Okay, the next one is a stop loss, and I imagine just about everyone is fairly familiar with this. And this is basically just a kind of a threshold for how much loss we're willing to take on any given position. And while the VSTOPS dots will, you can use those as a reference point, I also strongly recommend using a hard stop so that we know exactly how much is our maximum loss on any given trade. So if the market goes against us, it's a losing trade, but it doesn't clean out our entire account. Okay. The next one that we have included in VSTOPS ProTrader is a break-even stop. And the way a break-even stop works is that it's similar to a profit target in that it sets a value above where the entry point is for the trade. And if the trade reaches that point, what it does is it doesn't take us out of the trade, it just moves our stop up to that break-even level, so the same entry price that we went in at. And so this is a way to help protect our profits, especially if we have, if we're trading multiple positions where we can set a threshold for if the market goes up a certain amount, we're guaranteed that we're not going to lose any money on the trade. And then finally, we have the opportunity to kind of mix and match these different types of exits. And one of the more popular methods is what's known as a bracket exit, which is a combination of a profit target and a stop loss. So in this case, we're kind of setting a limit for what our maximum loss is and also what our profit target is. And if the market reaches one of these two, in this case it reached the profit target before the stop loss, what it's going to do is automatically cancel the stop loss and all the other orders in the market. So that stop order gets automatically canceled, and we're closed out of the trade. So in this way, we're using automation to help us manage the trade, which otherwise you'd have to do manually or through some type of OCO, some type of conditional order type. Okay, well, that kind of breaks up a little bit of the planning part of that. The next piece of this is the testing. And testing is, I think, a very important part of defining how we can truly evaluate our strategies. And before we start testing, we really have to determine how we'll test. And this is a very important step that's often overlooked. And traders often make the mistake of testing their strategies on every bit of available historical data. And we want to start by defining the historical data that we're going to use. And when testing an idea on historical data, it's very beneficial to reserve a time period of historical data to confirm the validity of your testing. We call that in sample and out of sample. So in sample is the amount of data that we're testing on. Out of sample is basically new data. So after we've tested this and we see good results, we can try it out on this out of sample data to confirm that it's working the way that we want it to. And then also we have what's called forward performance data, and that's the data that's yet to occur, that's in the future, that's tomorrow, the next day, the next week, the next month. So when testing a strategy, again, it's valuable if to take about 2/3 of the data available, historical data, and use that as your in-sample test. That way we have a third of that data reserved for out of sample that after we've done our testing and our optimizations, we can see if it works. So before we actually jump into testing, as I mentioned, it can be valuable to kind of establish the ranges of data that you're going to use in that testing. And next, we're going to take a look at basically what I like to look at when we're evaluating an intraday strategy. And it's, when we look at these this is a TradeStation performance report that we get when we apply a strategy to a chart. And this is, looking at historical data. And there's a ton of information on these performance reports. And again, I tend to drill this down into, 4 major metrics. The first one that I think most of us kind of get attracted to is what's called the total net profit. And this is just the bottom line for your strategy. And while it's hard to say that my eyes don't go there immediately, it's really one of the least valuable or least important in terms of how measuring the efficiency of an actual strategy. Keep in mind that this number can become larger just by adding more contracts and more shares. So when you look at a performance report, my first recommendation is not to look straight at that total net profit and make that your primary performance factor. Instead, there's another 4 that I like to use, and the first one is profit factor. And the profit factor is just the gross profit divided by the gross loss for a system, and this includes commissions. And basically, values greater than 1 show a profitable system. Values less than 1 show that the system is losing money. And so in this case, we have a system that's looking at 1.65, so it's showing to be a profitable system. And the way that I use this is in theory, this number should be as high as possible. And in reality, an in-sample than 1.5 with values above 4 suggesting the possibility of excessive optimization or curve fitting. And very high profit factors rarely correlate to actual trading performance. You might be wondering, why am I saying that? Don't you want these statistics to be as good as possible? Well, we do. We want to have, very strong performance in our models, in our testing. But the reality is, if they're too good to be true, there's a sign that might be a sign that these are curve fit, that they're really only going to work well on the data that we've tested on, and not in real, not in forward performance testing or as we walk forward. So in day trading especially, I think that it's valuable to kind of look at these values not only for, we want to get them above 1.5, but also, if it's too good to be true, a lot of times it is. So profit factor is the first thing that I use to evaluate the strategy. Again, I'm looking for numbers of 1.5 or higher. The next one is the percent profitable. And the percent profitable, this is just the number of winning trades divided by the total number of trades for a system. And this value represents the winning odds for the system. And this really depends entirely on the system's logic. And typically, day trading systems will have between 50 and 70% winning trades. Trend following systems tend to have lower values, while systems that rely on extremely high values like 70, 80, 90%, again, they often fail when you actually put them in the markets for real. The next one is average trade net profit. And this is the total net profit divided by the total number of trades. And this value represents the average amount of money that was won or lost per trade. You can almost think of this as the expectancy of the system per trade. And this number, again, will vary greatly depending on the system's logic. With your in-sample tests for minimal position sizes, it should be, over $30. It should probably be a lot more than that, but, greater, in most cases. And you should really avoid, to get this number higher or get this metric higher, you want to avoid increasing position sizing to improve on the statistic, because really what we're looking for is, a benchmark of what we can get, on a, per position. And then the final thing I look at on a performance report is the maximum drawdown. And this really defines the greatest difference or loss from a previous equity peak. And I think of this as the worst case scenario for a trading period. And it's an important statistic because it really determines if a strategy is possible given the size of a trading account. And in general, this number should be as small as possible. Systems that rely on a very large drawdown, I would recommend avoiding those because, again, it can, if this number is very big, if it costs you, hundreds of thousands of dollars to trade a system, you might reach a point of ruin before you actually, see any type of profitability in the system. So again, these are sort of the big four that I use in evaluating a short-term strategy. Again, I want to clarify that this is for short-term trade evaluation. The other thing that is important when you're doing this type of testing is that we want to have a significant enough amount of trades that this is statistically significant. So I usually use a number of about 180 trades. Like if I see less than 180 trades, to me the system isn't as valid as it would be if there were more than that. And if you see a system that has very few trades, I mean, if we only have 6 or 7 trades, again, there's a possibility that might be curve fit or really just work very well on the historical trades. It may not have as high a probability of trading that way in real life. So that's kind of what I use for testing. We're going to shift now to the next step, which is optimizing. And when we're optimizing, this is really just the process of adjusting a strategy in an attempt to make it more efficient. And as I mentioned on the performance report, um, we have we can focus on that total net profit number, but again, it doesn't give us a true sense for the efficiency of the strategy. It just showed us the bottom line of the strategy, but not how efficient it is. What I would recommend when we're optimizing is that we set the fitness function not to the total net profit, but something like the profit factor, something that can give us a better sense of the strategy's efficiency, not just what a potential bottom line could be for the strategy. And to do this in TradeStation, it's actually, you have to go to the View menu in the Chart Analysis Preferences, and this allows us to set the fitness function really for quite a big variety. But again, I tend to use profit factor as the main fitness function. So when we run an optimization, the computer is going to basically find the best profit factor out of this range and give that back to us. And so that's kind of the value of that fitness function. And the way that we would do this when using a tool like VSTOPS ProTrader is that we can basically optimize by setting a range, and we would setting a start point, a stop point, and an increment. And as I mentioned, there's two values with VSTOPs that have the indicator values that tend to have the most effect on its actual entries, and that's the period and the standard deviation. And for each of these, we can set a value, and if we wanted to answer the question, well, what is the best standard deviation, or what is the best period for this market that we're looking at, we can let the computer do the work. And so we can ask it, okay, if we start at 2 and go to 5 in increments of 0.5, tell us what the best profit factor, or what settings would yield the best profit factor. It can do that for us automatically, which is a very cool thing. And so in this case, it would start at 2, it would go to 2.5, then to 3, then to 4, and iterate all the way up to 5. Okay? And when it does that, it's going to come up with what we call an optimization report. And this just gives us the best value. So what this is telling us, and again, we're asking the question, what is the best setting for VSTOPs that would give us the most profitable historical trades? Well, this answers that question. It's a period of 32 and a standard deviation of 4.5. So this is, in a sense, a shortcut to answering a lot of questions. And there's more questions out there. We can ask that, what is the best stop loss value? What is the best profit target? So, optimizing is a very powerful way for us to really get the best performance out of our strategy. Now, talking about over-optimizing, I think I'd be a little bit negligent if I didn't bring up over-optimizing. And what over-optimizing is, and this just creates a system that looks good on paper only. And with enough optimizing, virtually any trading system can show close to 90% profitability. Again, we're at that point, we're curve fitting. So we want to be careful in our optimizing that we're looking for, values that give us, good values. But again, if they are too good, there's a chance that we're over-optimizing. Or if we don't have enough tests, again, there's a chance that we're over-optimizing. So I view this as smart optimizing. What we want to do is optimize in a way that's intelligent. And the way that we can tell that is really in the next step of our testing, which is the walk forward part of this. So after our optimizations, we get values that are good. And again, we don't want them too good. We want them to kind of fit within a good range that would give us the best chances of this performing, in real market, real live conditions. And so what we're looking at right now is an equity curve. And this equity curve is created through a TradeStation performance report. And it's basically just another tab. And it graphically shows us what type of equity growth we can see within a strategy. And in this one, the green dots represent new equity peaks. So anytime you see a green dot, it means the strategy is making more money. And the yellow arrow here represents, this represents the in-sample trading period. So in other words, the data on the left side of this yellow arrow, this is all in what we call an in-sample test. In other words, this is what we did our initial testing on. And for these 70 trades, it showed pretty decent results. Now, what happened between the yellow and the red arrows here is this is our walk forward. In other words, this is when we kind of let it loose on data that it had not seen, and you can see that immediately it declined. Okay, and that's not good. You know, that means that shows us that more than likely we have over-optimized our system. So how can we tell if we've over-optimized the system? Well, that's where this walk-forward testing step comes in. So ideally, what I would want to see is I'd want to see a continuation of the curve that I've seen in my in-sample data on my walk-forward tests, and that gives me greater confidence that we're going to trade at that same level. So again, this is kind of what we want to avoid, and this is kind of a classic curve that would be created from over-optimization. Okay, this one is looking a little bit better. So the yellow line, again, represents everything left of this yellow arrow represents trades that were generated historically and we optimized on. So this is kind of our testing, our in-sample test, and we can see that we had lots of new equity peaks in here. So those first 180 trades looked promising. And then the trades between the yellow arrow and the red arrow, this is our walk forward. This is, you know, sort of some of our out of sample sets. So if you can see that looked very positive. That actually kind of continued along on the same track. And then what we see on the right side of this red arrow, and this is our actual, you know, this is time that this is actually, you know, in the market on data that had been unseen. And we can see it kind of continues along on that same track, and we're continuing to make new equity peaks. So this is a sign when we see this, you know, this shows us that we have, you know, that we're probably not over-optimized, that this has, you know, between the yellow and the red arrows, that our walk-forward sample set is looking very, very positive, and it's a good, you know, that there's a good probability that when we trade the system, it's gonna perform similarly. And you can see there are some dips in here, and that's typical. I mean, we do see those drawdown periods, but they're not so severe that we would think about, you know, abandoning the strategy or going back to the planning stages of the strategy yet. So this is more like the type of performance that we would want to see out of our testing, our optimization, and our walk forward. And the last step of that, again, is, you know, I want to point out is that once we've gone through this five-step process, the fifth step is just trading it. You know, at that point, you know, it's ready to automate, and with the automation, it should perform very similarly to what we see when we've done our testing and our walk-forward analysis. Okay. I want to kind of talk a little bit about ProTrader. We've looked at some, you know, some idealized trades, and I mentioned that you know, that the VSTOPS ProTrader works very well in trending markets, but there's a lot of adaptability within the strategy template that allows us to apply it to some other market conditions as well. And I just wanted to go through that and kind of illustrate what that could look like. And this is a, you know, this is a chart of the S&P E-mini from last week, and it was a very choppy day. And you know, I do have, you know, there's definitely, you know, you can see that we're going very quickly between greens and reds. And one way that you can apply, or one way that you can use the VSTOPS ProTrader is that we can actually create the settings on the VSTOPS ProTrader and reverse the trades. And I've got a lot of folks that will take that VSTOPS ProTrader, will expand the standard deviation value, so that standard deviation is a little bit wider, and they'll actually trade inside the deviation. So instead of going long on the green, they would do just the opposite. And that's what you can see right here. And that's one way that we can adapt this tool to apply to choppier market conditions, is by simply reversing the entries. The other thing that we can do is we can, this is actually doing the same thing, we're reversing the entries, but we're also adding a bracket with this. We're adding a profit targets and a stop loss. So we're taking a little bit smaller chunks out of the market in some cases and not waiting for it to bounce all the way back. And these profit targets and stop losses can both be optimized to look for those better values. And while you know, this isn't, I definitely wouldn't consider this scalping, it definitely is a way that we can kind of take smaller chunks out of the intraday market when you do find these types of choppy market conditions. Another way that we can use VSTOPS is that we can apply it to activity intervals. while time-based charts are maybe the most popular in intraday market analysis, TradeStation also has a pretty awesome selection of activity intervals that include tick, volume, in volatility type charts. And with this is right now we're looking at a 600 tick chart of the crude contract, the CL. And you can see here that when we look at activity intervals, at this point, time doesn't become as relevant. We're actually looking more for the market activity to drive the movement of the VSTOPs. And while VSTOPs is volatility based, it does seem to respond very well to activity level charts as well. And you can see how it moves the stops up to key levels that helps protect profits along the way. And here we're also using we're using a combination of a profit target and a transitional point with the VSTOPs. If you can, I know it might be hard to see, but you can see, if you can see those trade lines. So again, activity intervals are another way we can test on activity intervals that can, this kind of an innovative way of trading the intraday markets using the VSTOPS ProTrader. And another thing that we can do is, I mentioned trading times. Within the strategy template, we can define the times that the strategy is going to take entries and when it's going to take exits and when it's going to close out at the end of the day. And in some markets we see, you can see reversals that occur at a particular time, and you can adjust VSTOPs to optimize for those particular trading times. And also we can also run an optimization to find out what those are to answer that question. We can let the computer do some of that work and say, listen, if we stop trading at, let's say in this case, 11:30, what we see is that the strategy becomes a little bit better suited to this particular market than if we were to trade to the end of the session. So trading times, again, another way that we can just apply this and look at the markets in a slightly different way. And then I included a Renko chart here. A lot of traders now are asking me about Renko charts. They've become a little bit, I think, more popular for day traders. And the Renko charts, again, TradeStation has a great tool here. I think right now we're looking at an E-mini S&P at a one point Renko chart. And we can apply VSTOPs to this as well. So when we apply VSTOPs to it, again, we kind of see the up and down bars. And we can see that when we apply this, we get a very clear indication of what type of market condition we're in, and we can apply VSTOPs to that. I will add that if you are using VSTOPs on a Renko chart, we're going to be using market orders, because in some cases there are some synthetic bars, and so the market orders tend to perform a little better than a static stop order, as we found. So we have some versatility in how we use this, and I just wanted to kind of point that out. And just to summarize, what the steps are in automating our day trading, the plan, number one, we want to adjust, the VSTOP settings to outline your entries, exit, and money management. Number two, we want to test. This is back testing your strategy, creating and evaluating performance reports. We talked about ways that we can do that. Number three, then we want to optimize. We want to improve our strategy's performance using smart optimizations. And again, I say smart optimizations because we want to avoid over-optimizing our strategy. We want to make it, able to perform, have the highest probability of performing on real market conditions as we can. Number four is walk forward. Walk forward, is basically looking at the forward performance testing to confirm our results. In other words, we're looking at out-of-sample data in the markets ahead of us to really solidify what we've seen in our initial testing. And again, I mentioned WFO, the Walk Forward Optimizer TradeStation has is very powerful, very robust, and is a great tool that you can use. It falls a little out of the scope of what we'll be talking about today, but that is one way that you can walk forward your strategy. And finally, when you're happy with the results and you get good correlation between your in-sample tests, your out-of-sample tests, and your walk forward, then it's time to turn on the switch and automate the strategy. So I really kind of boil, automating your day trading down into these 5 steps, and it can take some time, and that's what I think that if you have that interest, VSTOPS ProTrader can certainly, we feel, can minimize that time and get you right into the testing and the optimizing right off the bat, and see if this is something that this would fit into your trading plan. So if you're interested, if you want to subscribe to VSTOPS ProTrader, it is very easy. We actually offer a 10-day trial. It's available on the TradeStation Trading App Store. In order to do that, you just go to the Trading App Store. You want to find the product in the Trading App Store, and you can run a search for VSTOPS ProTrader, and it will come up. And then you want to click subscribe. And then there's an agreement. You just need to click and complete the subscription. Then you'll get a confirmation page that you subscribe to the product. Then you just go to TradeStation and click on the Trading App Store icon, and this will install the product into the platform. And then once the installation is complete, you'll see a launch button, and then just click that to open the workspace that has VSTOPS ProTrader on it. And again, I want to mention that this is a strategy template. This is not a black box strategy. We don't offer settings. We really leave it up to the traders to do your homework to get this, to tune it the way that you would like. And don't be surprised if out of the box the first chart you put this on doesn't look phenomenal. We feel with with a little bit of work and kind of running through this process that you can turn it into something that can be potentially very good. All right, well, that's all the information that I have covering today, and I'd like to, I see there's a couple of questions in the chat box. I'd like to go ahead and cover those questions. If you do have any other questions outside of this webinar, please feel free to email me. I mentioned that we do offer a variety of products, but VSTOPS ProTrader is the only strategy template that we offer at this time, and we feel it's a very good product. So Hassa asks, so one of the questions is indicator. Can we use it with known indicators like RSI, Bollinger Bands to do its calculation, or is everything proprietary? That's an excellent question. The VSTOPS calculations are proprietary. You can use you have access to the function, but we don't disclose the logic. We feel that that's something that we've spent a lot of time developing. Again, I would explain that as it's an adaptive volatility filter that responds very, very quickly to an intraday market. We find that it like if you compare it to something like an ATR, it performs much faster than that. And so the strategy template is designed to work just with VSTOPs, not to combine indicators. I think that again, it's really geared towards kind of jump starting if you haven't done any type of system trading or testing to jumpstart that. And I wouldn't necessarily recommend using it with other tools like an RSI or a Bollinger Band, just because without getting too far into this, you kind of risk what we call of creating something that's maybe not as profitable. Something that might be what we call multi-collinear, which is when you kind of add too many price-based indicators together. Alexander asks, can I use my own indicator with VSTOPs to generate automated entries and exits with Tourmaline? This is kind of a similar question. Again, VSTOPs is really designed to work on its own. It's a binary type of indicator, and the signals, they're very clear signals, and they're not designed to work with with other indicators at this point. Robert asks, can I apply this to Forex? Will it print blue bars right out of the box? Yes, it will. I think that we get a Forex data feed. I'm not sure if we can trade Forex with it on TradeStation, but it works very well on the futures. It works well with ETFs. It's not something that I would recommend on like thinly traded stocks, just because volatility can spike on those, and it may not be the best tool for that. But certainly, for markets that are well traded, that trade with good liquidity and good volatility, this tends to perform best. And like I said, the futures markets, the E-minis in particular, they tend to be good markets for VSTOPS ProTrader. All right. Well, I don't see anything else in the chat box right now. I will say that I definitely appreciate everyone logging in today. And if you do have, again, questions about this product or any of our products, please feel free to email me. We also do work with custom implementations. So if you are looking for a custom type of strategy solution, We'll be happy to provide you with a free quote on that and help you with that as well. But we feel like VSTOPS ProTrader has been a very good product for us. We have a lot of traders that are supporting it and using it on a very regular basis, and we feel it's a very good tool to get into system trading and specifically automated day trading. Well, with that, I am going to turn this back over to Michael Burke, and again, I appreciate everyone logging in today. Thank you for attending.
Thanks, Lee. This is Mike. That was a great presentation, lots of great information there. Thanks, everybody, for attending. We will be recording this presentation, and you'll be able to find it on the Trading App Store within a few days. Thanks, everybody, for attending. Thank you, Lee, and we'll see everybody at an upcoming TradeStation event. Have a great evening.